Hello, this is Pat Walker, Mission Winners, doing a video overview of the ETFs, the major industry ETFs. Why do we do this? This is a great systematic way to see where there is strength in the industries or where there is weakness. By knowing that, we know industries that we should concentrate on with stocks or by the ETFs themselves. There's nothing wrong with that if they have a clean and simple entry. The other side of it is areas to avoid, stay away from. Let's scrunch this a bit here. Here's biotechnology, BBH. Up in the upper left-hand corner, you can always see what it is, just to let you know. It's biotechnology. This is a great maxim for us. Stay away from stocks, ETFs that are below the falling 50-day. It's good policy. This is really lagging. Hit new lows for the year right here. Nothing to do with biotech. What's it mean? Stay away from biotech. Cloud computing. Stay away from cloud computing. Here it is. This is as of Friday, 5/6. That's awful. Leave it alone. Autonomous electric vehicles. Look at this. Lagging. Be careful with it. Leave it alone. Dow Jones Internet. What's this tell you? Leave it alone. I'll shrink this a bit. You see this? There's nothing to do with it. IBD 50. Lagging. Leave it alone. This is a powerful thought, by the way. The IBD 50 is a great list of stocks. I'm not slamming it at all, but it just shows you how bad the market is. This thing's hitting lows here. There's nothing to do with it. Gold miners below the 50-day, all right? It was a strong group. Now it's lagging. Be careful with it. By the way, note the selling volume on that bar. That's a negative when it's below the 50-day. Gold below the 50-day. Be careful. Biotechnology, another biotechnology ETF. Look at this. This is awful. Now we've seen two of them. What does that say? Stay away from biotechnology. It's that simple. That helps us. Online retail, lagging, hitting lows. Tells you to stay away from it. North American technology, hitting lows right here. Leave it alone. Nothing to do with it. Folks, and I stress, this is technology. It's been telling you, be careful with technology, and that helps us. Medicine, down here, 52-week lows. Be careful with medicine. Mid-cap. Lagging. Look at this. No power here. Be careful with that. U.S. home construction was good at one time. Back here, look at that. That's great. But now, it's nothing. You have to leave it alone. There's nothing to do with it. Just wait. By the way, I need to pause here and share this. Please don't think I'm bearish. Oh no, I love the markets. I love stocks. But I know for a fact that it's important to key on the leading groups and the leading stocks. We have stocks that are making great runs right now because we're in leading sectors. Leading groups, that helps us. S&P 500 growth, hitting lows right here, leave it alone. Small cap, lagging bad. Look at, this is the falling 200-day. Watch this. Ugh. Ugh. I'll leave that like that so you can see more of the chart. How's that sound? U.S. global airline stocks. Rallied up and it's fallen again. Not much to do with it. Regional banking, dead. Leave it alone. Mid-cap, hit lows for the move. Dead. Leave it alone. Oil services, hanging in. Look at this. Hanging near the 50-day. OIH, oil, energy. Something to remember that. Oil. Oh, gee, look at this one. Oil. Pure beta check. Look at this. Look at this base. That's telling you something. And yeah, we're heavy in energy stocks. It's told us to. That's simple. Online retail, they're selling us what they're doing. That's a bad pun. I'm sorry I had to say. This is said for a long time. Stay away from me. Stay away from me. Infrastructure was strong at one time. Now it's really underperforming. Leave it alone. Pharmaceuticals, lagging. Still above the 200-day, and it did bounce here on Friday off the 200-day. So in relation to a lot of others, that's not bad. PPH, you could look and see what the top 10 holdings are. Maybe there's something in there. I know one stock that's in there, Merck. Here we go. Cloud computing, lagging bad. Look at that. Leave me alone. Steel, lagging. Leave me alone. Semiconductors, lagging. Leave it alone. Solar, lagging. Leave it alone. Small cap, lagging. Leave it alone. Uranium, lagging. Beware. Oh, another oil, USO. Gosh, look at how this acted. Gee whiz, let me think here. Have we talked about oil before? Yes, a couple of times. It's been telling you, look at the oil stocks, the leading oil stocks. That helps us. Aerospace and defense, nothing. Biotechnology, another biotechnology ETF, leave me alone. Home builders, leave me alone. Materials, basic materials, chopping around below the 200-day, nothing to do with it. Oh, what is this? Oh, energy. Gee whiz, another energy. Huh, we own this. Gosh, let me think here. What is oil? What would you classify oil as? Gosh, you'd kind of classify that as an energy stock. There you go, and there's further confirmation of it. There we go. Financials, dead, leave them alone. Industrials, dead, leave it alone. Technology, look at technology. Folks, this was a real leader for a long time. Look at that run. We made a lot of money in technology, and now there's nothing to do with it. Be aware of it. Consumer staples, support at the 50-day, okay? Consumer staples, consumer necessities, okay? You got to have deodorant, at least I hope you do. You've got to have toothpaste, at least I hope you use it, all right? Toilet paper. I won't say anything else. You know what I'm saying. Things that we need, staples, defensive items, all right? Hanging in, tells you something about the markets. Utilities, kind of defensive. Below the 50-day, kind of hanging in. We'll watch and see what happens. Defensive. Healthcare lagging, be careful. Consumer discretionary. Look at this. Here's the difference. Consumer staples are the necessities that you have. Discretionary, I don't really need it. It's not necessities. It's lagging. Tells you to be careful. Metals and mining, lagging, be careful with that. Oh, what is this? Oil and gas exploration. Gosh, how would you classify that? Is that retail? No, it's energy. There we go. You see how you build a case? And that's why we're heavy in energy stocks and have been. Retail is on sale. Software, no dice. So we're looking at the max list. Apple, nothing so good about this right now, is there? Leave it alone. Amazon, look at this. This is awful. However, I will tell you, you see this low here and this low here? This is called the higher low setup. I'm going to give you a great lesson here. Right here. This low is higher than this low. Advance at 1 bar. It starts to take out the highs of the previous bar on a pickup in volume. It gapped up and started to lift. We bought on this bar. Okay, this was on the key list to buy. We bought more on this bar, volume picking up. So we own it right here. We'll say we own it for, well less than 3,000. We'll call it $29.50. Okay, how's that sound? Okay, that's pretty good. Oh, that's pretty good. Yeah. Oh, that's pretty good. $29.50. Remember that. Okay, pulled back a little bit. Okay, it's basing here. Oh, it's picking up again. Okay, that's pretty good. We're up 400 points. Pulls back. Okay, and then starts to lose it. Sells right in here. Losing. See those marks? Losing the 200-day. And then when it finally cracked through the 200-day, the rest of it sold. That's good money. That is the higher low setup. Right there. And isn't it great that we bought when we did? And isn't it great when we sold when we did? Because look at it now. There we go. Anyway, is there anything to do with it now? No, there's nothing to do with it. BIDU, nothing to do with it. Leave it alone. Meta or Facebook. Potential base here. It's below the 200-day. This needs to show some real power. Not much happening there. Google, nothing. Maybe a potential higher low. This low, higher than this low. But it would be very aggressive. Okay? Be careful with that. Be careful with it. Goldman Sachs, higher low. Nothing really special. MasterCard's chopping around. There's nothing to do with it. Microsoft needs to base and go through these tops. Nothing really to do with it. NVDA, nothing to do with it. Tesla had a higher low here. It was a great run. Has a higher low right here. It may have potential, but we'll have to watch the market. By the way, this was bought 3 times right in here. You say you got an average cost. I don't know. We'll say an average cost of 810. 810 up to 11 something. 810 to 1110 is 300 points. There you go. There it is. Potential higher low here. We'll watch and see what happens. Remember, though, you need the market lifting too. The moral is be cautious here. Twitter, potential. But we know about the takeover talks with Elon Musk. So there's a degree of risk with it. That's not a criticism against Elon Musk. No, it's a potential takeover stock. There's potential risk with it. That's all I'm saying. Be aware of it. Maybe it'll take off. Be cognizant of that, okay? Visa, nothing. That's where we're at. I want to make this for everybody just so you know what's going on. I thank you all. Have a good, safe weekend.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.